Welcome to the Video CPA. It's good to be with you today. It is 2020. It's tax season for 2020, so I hope your tax preparation activities are going well, whether you're doing the return yourself or whether you're taking it to a professional tax preparer. I hope it's going well. And I hope these videos are helping you. Today we're going to talk about the child and other dependent tax credits. So we will have covered 5 of the main tax credits in the last 3 videos. The earned income tax credit, the 2 tax credits for education, and today the child and other dependent tax credits. So again, I hope these are helping you. So let's get into it. First of all, we've got our affiliate marketing disclaimer here, and then we've got our educational disclaimer as well. So read those as you go through. And let's get into what credits are available then. The child tax credit is still available. And the credit for other dependents is available as well, which is a little bit different tax credit, but it has been available for a couple of years. So let's look at the rules for the child tax credit first, okay? So the first thing is they've got to have lived with you for half of the year, at least half of the year, and you've got to have provided at least half of their support, okay? Then next, the child must be under the age of 17 on the last day of the year. So if they're 18, you can't take them, all right? They also, if they are married, now 17-year-olds do get married and kids under 17 sometimes, so they must not have filed a joint return with their spouse unless it was only to get some withholding that they had paid in back. So if it's only to get a refund, they can do it. They have to have a Social Security number. Okay, so and then the taxpayer's modified adjusted gross income must be, if married, less than $400,000 to get a full credit, and less than $200,000 if an individual. Now there are phase-out rules, so at $440,000 it phases out completely, and $240,000 it phases out for individuals. So that's a pretty high income threshold these days. You know, when we talked about the education credits, it's far less, and again, I don't know why they don't get consistent with all these phase-out rules. I don't know why an education credit would phase out before this, but hey, I'm not the IRS, and I'm not the people writing these regulations, or it would be different. So those are the main rules for the child tax credit. Now let's go ahead and look at what that child tax credit will get you, okay? So the child tax credit is actually a $2,000 credit per child, all right? And if you have 20 children, you get all 20, all right? But if you don't owe any tax at all, then you don't get you only get a portion of the credit, okay? So $1,400 of the credit per child is refundable. So even if you don't owe any tax, you can still get a refund for that $1,400 portion of it, or at least part of that $1,400. So that's a good deal. It's a good deal. So you need to be aware of these credits and make sure you're taking them. So the child tax credit it's just a real nice deal for families with children, and it takes a lot of money for parents to raise children. I know I've got 7 kids, and I know how much they cost. So and one thing, don't think that once they're out of the house that they stop costing you money. That should be the case, but it's not always the case, okay? Now, let's look at the credit for other dependents, because this is a different type of credit, and the rules are a little bit different for this one. So, again, if it's a qualifying child, they have to have lived with you for half of the year, and you have to provide at least half of the support. If it's a qualifying relative, or even a non-relative, you can take this credit if they're living with you, but they have to live with you for the full year. And they also have to satisfy the requirements of a dependent, which means you do have to provide half of their support, okay, at least half of their support. And there are other rules that you have to abide by that would qualify them as a dependent. We'll talk about a few of those as we go on. Now, they can't have been taken as a child on the child tax credit. So that generally means they have to be over 17 years old. If they're over 17 years old and you can't take the child tax credit for them, you can take the credit for other dependents for them. Okay, so that gives you a little bit of a break for children that are over the age of 17. All right, and in this case, they don't have to be necessarily a U.S. citizen, so they don't have to have that Social Security number. They can be a national or a resident alien. And in that case, then they could have a Social Security number. They could have an ITIN, which is a individual taxpayer identification number, usually given to non-resident aliens, okay? Or they can get what's called an ATIN, which you probably never heard of, but that's an adopted taxpayer identification number. So if a parent goes out and adopts a child, they may not be able to get a Social Security number for that child for a while, and so they get an what's called an adoptive taxpayer identification number during that interim, so they can still claim the child, okay, at least for the credit for other dependents. So and have an identifier for that child. All right. So those are the four things that we look at, but there's more. So let's go ahead to the next page and look at what else we have. They can't, again, have filed a joint return with their spouse unless it's for refund purposes only. The phase-out ranges are the same: 400,000 and 440, and 200,000 and 240 for married and married filing jointly, and then individual taxpayers. And then the qualifying child has to, or the qualifying dependent, whatever, qualifying child in this case, must be under the age of 19 or 24 if they're full-time students, or they must have made less than the income requirement for a dependent, which was, I think it was $4,300 last year. So they can't have made much money, and that's the case for dependents other than qualifying children as well. So you have to remember, if they're a qualifying child, they have to have lived with you half the year. If they're just a qualifying dependent, whether that's a distant relative or it's somebody that's not even related to you, they have to have lived with you the entire year. Okay, and then you've still got to meet the support requirement for any dependent. So the rules for the credit for other dependents a little bit more strict in some ways, in other ways they're less, than the child tax credit. All right, so let's go ahead and see what the amount of credit is here. Okay, so the credit is only $500 in this case, and that's the maximum credit. It does phase out. The phase out rules are the same as we discussed. So $500 per qualifying dependent. If you get 20 qualifying dependents, you get 20 times 500. But no portion of this credit is refundable. So if you don't owe any tax, you're not going to get anything for this. And unfortunately, that makes this dependent, well, it's still a great credit, but it makes it a little bit, makes us a little bit less happy about it when nothing is refundable in this case. Okay. So let's look at how we claim the credit, okay? This credit is, you can go to publication 972, which is the child tax credit and the credit for other dependents, and it contains a worksheet there for calculating the credit manually, all right? If you're still filing your tax credit manually or your tax return manually, go out to the IRS and get their free software and do it on software, because the software will calculate this credit for you. All right, you don't want to go through some of these gyrations on these worksheets that the IRS sends you through. So get some software. It's free if you go through the IRS site. I've got a video on that I did last year that you can look at and see how to get your software free. If you don't want to get it free, go out and get H&R Block or TurboTax or something. So, but if you use tax software, it's going to calculate this credit for you, and it's going to use your dependent information that you entered, and it's going to calculate the child tax credit. And it's going to ask you more questions, actually, so it can decide between the two credits which is the best one to take for you. So from your dependent information, it's not going to know basically all it needs to decide between the child tax credit and the credit for other dependents. So it will ask you a few more questions, and then it'll calculate it for you. So tax software has been a boon to tax preparers and a very nice thing. Now, you also got to remember that as we talked about with the earned income tax credit, and I should have talked about it with the educational tax credit, all these credits have due diligence required by the preparer. And you may not be a paid preparer if you're doing this or helping someone else, or you're doing it for yourself, but there are still due diligence requirements that you need to follow, okay? And if you don't follow them, you get a penalty. So the IRS shows up at your door and wants your backup, and they're not going to show up at your door. They're going to write you a letter, basically, first. But if they want backup for this thing and you don't have it, you may get fined. You may get penalized. So, and certainly preparers will get penalized if they don't have backup. So just remember, when you prepare, if you're using a paid preparer and they're asking you for all this information, there's a reason for it. They don't want to get penalized. So the IRS, like I say, is making tax preparers their first-line police, it seems like, and making sure that taxpayers are honest when they get their returns prepared. Now, some of the due diligence requirements, some of the things that you might have to have and give your tax preparer or keep on hand yourself, or your school records that show that the kids lived with you. Healthcare provider statements. I don't know that your landlord or property management statement's going to list all the kids that lived with you on it, so I don't think that's necessarily going to be helpful, but that is one thing that's listed. Certainly child care provider records would be good. If you've got a adopted child or something like that, social services records or placement agency records would be good. And so keep the records on hand. You need those to avoid penalty and to be able to support your deduction. Because if you lose these deductions, if you're taking $6,000, 3 kids, and you lose that, that's plus penalty and interest, that's a lot of money that you're going to have to pay back. So make sure that you can support your deductions when you take them. And good credits, though. So like I said, we've got videos on 2 more of the credits that you should watch. The 2 educational credits that I've made a video on, and then the earned income credit. And all these videos are done for the 2020 tax preparation. They're fairly new, so go out and watch those. Some of you have subscribed to the channel and you've been watching those videos. I appreciate that, and if you haven't subscribed yet, please do so. I appreciate anybody that subscribes and likes the video. So thank you again for watching.